margins of around the mid-30s.
All right, interesting conversation. But, Nigel, that rare earth question, I remember, it's under the wraps. It remains under wraps in terms of...
I think it's rare.
It's rare. It's very rare.
No, I think
that's a big opportunity.
That's the big opportunity.
That's the big one. It's a kicker, upside kicker. It could be anything. It is substantial, we know, but how substantial, how big, that is something we try to probe, but, it's still, we'll get to know when we do. The market is up 100 points and it's steady, right? I mean, not very much different from how things were 10-15 minutes back. So it's kind of a strong start and then plateaued out. Lots of stocks are moving. We'll get to that in a bit. But Arvind Fashions is the next corporate we are speaking with after the company reported its highest ever quarterly sales. Gross margins have expanded, led by lower discounts and better channel mix. But revenue growth on a sequential basis, quarter-on-quarter basis, has been flattish. The emerging brands segment has managed to clock in good growth as well. Premium, of course, is doing well. Kulin Lalbhai is Executive Director at Arvind Fashions. He's joining us to take some questions to tell us how things are looking. Kulin, great to have you with us here. Good morning. Prashant this side. So let's just start there. In terms of the quarter that went by, could you tell us what kind of volume growth should we see? Did you take pricing action as well? Just trying to understand what the mix is between volume growth across brands and pricing action, and how these contributed to overall turnover growth, and how are things really looking? Are things picking up, accelerating for you, urban versus rural, or are things, it's a bit mixed now, as we've heard from many other companies as well? Go on.
Yeah, so we had a very robust sales growth of 17%, and one has to understand that last year, Q3 was the first real completely recovered quarter. So in fact, last year, Q3 was a very strong quarter where pent-up demand had got unleashed because COVID had just receded. And on top of that, we have grown 17%. So in fact, it's a very robust growth. The ASPs in general were up by 8 to 10% because of the cotton prices. So there is a good amount of this. I mean, more than half that came through, increase in prices. But we have had volume growth as well. And that, in a sense, shows how, the brands that we have, the brand portfolio is strong. And that's why it's driving both volume and value growth. We believe that, currently the momentum which we have seen in Q3, we currently expect that momentum to continue. So we are seeing broad-based growth. Online as a theme has always been playing out for the last 3-4 years. But the theme this year is that the offline side of the business is seeing a big lift, which is very encouraging.
Kulin, morning. If I could just nitpick for a second over here, take your points on the year-on-year comparison. But I was a little surprised to see that sequentially, the revenue is actually very flat. And it's the third quarter, right? It's a festive season. Everybody wants to look good, feel good. So what could explain that? I mean, are there some nuances in customer behavior that you're picking? Is the pricing increase beginning to maybe pinch a little bit?
No, that's a very good question. Let me explain. It's difficult to look at quarter on quarter in our business because we have all our channel mixes change every quarter. So Q2 is when our wholesale channel picks up. That is where we send all the goods beforehand to the market for Diwali. So Q2 is a wholesaling quarter and Q3 is a retailing quarter where our retail part of our business really picks up. So even if you look at historically, the difference between Q2 and Q3 for our company is not very large. This particular year was a little different because Diwali was early, and that's why Q2 was a little larger than normal, and Q3 is a little smaller than normal on the margin. But again, I repeat, year on year is the right way to look at our business and not quarter on quarter.
Hi, Kulin. Good morning. I recall you saying that the power brand portfolio can have double-digit margins in 12 months or so. And the company on the whole will move to double-digit margins. You've achieved that, right? So what's the outlook from year on in terms of, margin outlook, as well as now you're clocking a good 1,000 crores per quarter. How does FY24 shape up?
Yeah, Nigel, so we are still a little shy of the double-digit pre-Ind AS. Post-Ind AS, of course, we are at 12%. But, there is a difference of 400 basis points for us between pre-Ind AS and post-Ind AS margins. So we do believe there is going to be a lot of operating leverage which is going to come into our business year on year. If you have seen this year, our margins versus last year have gone up by 400 basis points YTD. Of course, that was because of the COVID impact last year. But even without the COVID impact, like this quarter, we have increased versus last year, Q3, by 100 basis points. And there was no COVID impact. So this is pure operating leverage kicking into our business. And that's happening because we are lowering discounts, increasing full price sell-through. All our brands will move towards larger scale. We want to build 1,000 crore brands, and that's the journey we're in. So as the operating leverage kicks in, we would expect our EBITDA margins to go up by around 100 basis points every year.
Okay.
And on the growth side, we have guided anywhere between 12 to 15% growth over the next 3 years.
Kulin, you said, you said 1,000, you mean 100 crore brands, right?
No, we now have consolidated our portfolio. We are focused on only 5 to 6 brands.
Yes.
And almost all of our brands are now larger than 500 crores. But the ones which are around 500 crores also will scale up to 1,000 crores. And very large brands like US Polo, the ambition is to make them cross 2,000 crores in scale in the very near future. So we are now building very large scale brands so that the operating leverage kicks in and the free cash flow profile of the business transforms.
US Polo moves to 2,000 crores by when?
In the very near future, Nigel. I mean, this year we've already clocked 1,500 crores in 9 months. So we are well on track to be very
then it
close
should be
to
this year itself, Kulin.
crores.
It should be this year itself. I mean, you're going
We will be close to that
crores.
number.
Okay, all right. And you also
that.
spoke about the online business. I think it was 20-25% of business, right? What's the growth you're seeing out there, and what's the contribution?
So it's around 25%, Nigel, as you said. It's a very healthy business for us, growing very well. And, it should grow faster than the offline side of the business. So we do expect, now the scale is very large, but we do expect that growth rate to be at least 5% higher than the offline side. So 15 to 20% would be the guidance for the online business.
Okay. Kulin, very quickly, just to clarify that margin point, if I heard you correctly, I think you said that you were looking to increase margins by 100 basis points every year. I think FY22, you were close to 6%. When do we see double digits? Then is that 4 years?
So, our first milestone is that we hit our power brand double-digit EBITDA, and we do expect to achieve that milestone next year because we are already just around 100 or so basis points away from double-digit. And then when the smaller brands scale up, those will also start moving significantly on their EBITDA profiles. So right now, our guidance is 100 basis points in margin on the base we have, but we would look to better that as well, every year.
And you said, Kulin, that all your brands are 4 out of the 5 are 500 crores plus brands.
Yes, that is correct.
Okay. Okay.
I think we got a sense. I think Prashant is contributing to that growth.
I'm sure so are you. Happy customers?
How is Arrow doing, Kulin, if I can probe a little bit?
So, Arrow has been a great turnaround for us. We've worked very hard on the brand over the last 3 years. The product is re-energized. We've got a new retail format. We've got a great brand ambassador in Hrithik Roshan. So the brand has very high energy right now. It's now 3 quarters of consistently positive EBITDA. And, as the brand gains scale, it is also going to move, from the mid-single-digit EBITDA margin towards the double-digit EBITDA margin over the next 2-3 years. So we're very happy with that turnaround, and the brand is now well on its way to scaling up towards the 1,000 crore mark.
Okay, good to hear, Kulin. It's a pleasure. Thank you very much for joining us. and a good commentary and very optimistic on the business going forward. Thank you very much for taking out the time and being with us here on CNBC-TV18. Well, let's just take a quick look at the market, which is now I think at the high point of the day, we are up 115 points up, which means that we are at 18,130. The high actually is 18,134, but almost there, 4-5 points away. We'll take a break here. We are back. And on the other side, we get you a quick technical check on markets. Mitesh will do that for us. And of course, we take